Good morning. It's Friday, December 6th, about 6 a.m. Central Time. Overnight, the precious metals are recovering after yesterday's unexpected sell-off. Perhaps investors were being a bit cautious ahead of today's jobs report, or perhaps the number had leaked and the big boys were positioning ahead of it. So we'll wait and see. Number comes out 7:30 a.m. Central Time. So looking at the scores on the board, what I do on Fridays, end of month as well, I'll look at the week to date or month to date performance and kind of get a gauge as far as where we're at here. So gold down 0.7%. Silver up nearly 2%. So what we'll want to look at is the gold silver ratio, and we check that, it's at 83-1. So it confirms that silver is gaining a bit of momentum on that gold market at the moment. Copper up 2.3%, and that's really the reason why we're seeing silver futures push up just a bit. And then platinum down 1.3%. I still think platinum gives people an excellent opportunity to position ahead of this seasonal tendency where we see platinum prices rise in December and into January. So if you look at the metals edge, I break down that 15-year analysis and also the chart pattern there that we typically see in that platinum market, as well as I do it in gold, silver, copper, and again, platinum. So looking at some headlines to watch here, you have the U.S. equities that are pulling back from all-time highs. They've had 3 straight weeks of gains. Look a little bit frothy up here, but buying the dip in the frothiness has been what works here, especially in raging bull markets. Now, some key data coming out here. Again, that November jobs report. This is an important report because it comes ahead of that December 18th meeting, and it's kind of the final big report that we'll see here that is going to dramatically impact where prices go and also the expectations for the Fed to cut interest rates. So checking the CME's Fed Watch tool, you have a 70% chance that the Fed cuts 25 basis points, a 30% chance that the Fed leaves rates unchanged. Now looking at the overnight price action in February gold, it's at 26.59. It's recovering from yesterday's meltdown. The range here, we're kind of near the upper end of the range, 26.35 on the low end, 26.67.90 on the high end. Silver 31.70 last here, range 31.93, low 31.39. So back in the middle of it. Copper up 4 at 4.24. Platinum futures are unchanged. Oil down about 60 cents right now, trading at 67.69. So the thing about oil, do this on your charts. Throw up a daily chart on oil, throw up the 100-day moving average. So the 100-day moving average is your resistance point. You can see that it's failed there multiple times, and then the mid-60s is going to be your major support level. So what people will end up doing is they'll buy oil in those mid-60s, and then they'll sell part of their position as we get close to that 100-day moving average, and then a breakthrough there, what they'll do is they'll ramp up their positions and try and play for a movement much higher here. The range, the average true range on that oil market's been about $2. So if you get that breakout, perhaps it can tack on another $2 higher, call it $72 to $73 a barrel here. Looking at the US dollar index, so this is where I'm really disappointed in the gold market yesterday. It had all the recipe. We were baking the cake for higher prices here, especially with the dollar index breaking down. You saw the dollar 105.80 last, that's up 10, but you want to keep an eye on that 105.57 because the dollar index got smoked yesterday, and that breakdown could really lead to a head and shoulders pattern. Now, something I didn't think about was that gold futures hit an all-time high against a lot of different currencies. It hit an all-time high against like the euro currency, against the pound, against the Aussie dollar, and not against the US dollar. And that was when the turmoil was really taking place over in Europe. That was about a week ago, especially with this French election and no confidence vote. And what probably happened, now that I'm thinking about it yesterday, was that those people that sold euro currencies and bought gold and drove it up to an all-time high in that market, they unwound those bets yesterday, and it's because you're seeing French 10-year bonds are coming down. That's what happened yesterday. So I'm going to have to discredit that the number had leaked, and it was an unwinding of those European investors going into the gold market because they believe they're pushing past the political turmoil right now, and that's why your CAC 40 was up. So it all makes sense now what was going on. So the S&P 500 last 60.80, that's down about 5. So geopolitical headlines are they are rising with that political uncertainty in France. It was the no confidence vote over the budget, the expectations are they're going to get a new prime minister. So you're seeing the CAC 40 rise and they're looking forward progress. And those were the guys who were liquidating the gold market. So South Korea still making some headlines, political instability. The president is expected to face an impeachment vote tomorrow. In the Middle East, you're seeing no real headlines are on the back burner at the moment. You're looking at no new news in the Russia-Ukraine conflict. So you get into the gold market, the chart pattern still consolidating here. The resistance is 2690. High in the overnight session, 2669. So that 2690 resistance, throw this date on your chart, November 29th, those highs. Throw the 50-day moving average on there, 2701. That'll be another resistance. That'll be your pocket resistance, 2690 to 2701. Trend reversal point comes much higher, 2747. So we break above that. You'll see a bunch of people go into the gold market. The phone will ring off the hook. People will want to get involved with it. They'll be buying the breakout again, not wanting to miss the market. And that's where I say that the trend reverses to the upside here. So today's probable range, here's the problem with a probable range and having a true trading plan, is you go into non-farm payroll, you go into a weekend, and that number is going to be so volatile because it could be a big miss, could be exceeding the expectations. You're going to see the CME's Fed watch tool shift dramatically. And then what'll happen is that the market will be all over the place. So what I'll typically do is I'll look at the probable range, 2637 on the downside, 2672 on the upside. We were near the upside and near the downside, but you get a break above, it opens up the door for that run into 2690 and 2707. Any kind of washout, you're going to see that support level 2620 down to 2602, but don't be a hero when it starts to break down and go in there. So my recommendation is, usually what I'll do is if it hits the level that I like, I only stick a toe in the water. You don't want to jump in full throttle because you could have another washout down to the contract low. So you want to keep that in mind in the back of your head. You always want to have a plan when you go into these types of big events and things like that. And then you go to the silver market, you got pocket resistance. So the high was 31.93 in the overnight. Pocket resistance is 31.90 to 32.04. That's held since, if you look at the chart, you get the election breakdown, you get a small recovery, and then that's been the resistance point there. And then something to note is that when we get to $32, the phone rings off the hook. Half the people working with me want to take positions off because they want to book a profit because they're playing a trading range, or they've ridden it back up to that level. It's failed so many times that they want to lighten up the load. And then you'll have the other people that are saying that have been underweighted in the silver market. They'll come in and they'll ramp up their positions because they're waiting for a breakout to the upside. So your trend reversal point on silver is 32.69. So call it really 32.50 to 69. A lot of the analysts out there have a line going across their chart at 32.50. We break above there, then the market most likely could continue to move higher. So that's where you get 33.07 is your next resistance beyond that. But I wouldn't necessarily take positions off because we could run all the way up to 34.35. So today's probable trading range here, again, no real formal plan on an event like a non-farm payroll. It's 31.48 on the downside. We were already just below there sometime in the overnight session. 32.24 on the upside. So you're getting a higher low and a higher high on the probable range. A break below that low takes it down to 31.14. But again, be nimble down there because we break below that key level of support. You get the washout down to 30.80. So, and then the phone will be ringing off the hook. People will be scrambling, the ones that ramped up, thinking to take some of it off. And then the other half, the people that took some off, are going to be increasing their position. So it's a real, when markets consolidate for a while, you get a lot of traders trading different ways within that consolidation point there. So that's how people get chopped up, the ones that buy the rip, and then they end up having to sell the dip. And then you get the people buying the dip and selling the rip, and that's where we get this consolidation phase. We got to break out from it in order to get some new price momentum. So longer video, something to note. I'm not going to be in the office for the next 2 weeks. I'm going to try and give you guys as many videos as I can. I got to go to Gainesville, Florida. My daughter's having open heart surgery, so pretty big deal here. So we'll see what happens as far as the metals minute goes. I will be able to take, calls and trade and everything like that. I'll have the trading operation with me. Also, I have partner Bill Baruch. He should be on CNBC. He's on all the time here. He's on the halftime show. He covers your U.S. equities. And then if you ever seen Oliver, if you follow grains and livestock, he's on RFD TV. That's my other partner as well. So you guys got any questions? We got the bases covered. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck. Have a great weekend. Take care.